The guy who posted it was like, I'm worried about Weimar Germany, and then linked to a photo of people shoveling German marks into a gutter. They just kept printing money to try and keep spending it and paying back, to keep the machine going, essentially.
In 2020, a staggering 40% of the US dollar supply was printed in response to the COVID pandemic. That was printed in just 1 year. Now, some are saying Solana's token inflation is just as bad. But is it really? Stick around until the very end of this video to find out if token inflation is killing Solana, and who knows, we might just eat the heads off of some bats. Let's get it. I'm not a financial advisor. Welcome to the channel. I'm your host, the BitBoy. Sadly, I've been told that we will not be able to actually eat the heads off of any bats. But if you would want to learn more about crypto, make sure to hit the subscribe button and smash that like button. If you find value in this video, I'm from the future. You will. Every crypto project faces its share of FUD, and Solana is no stranger to critics. They say SOL stands for shit out of luck or seldom online, but outages aren't the only thing Solana's critics focus on. Take a look at this tweet about Solana's inflation rate that says Solana VCs are printing millions of new Solana tokens out of thin air. And since August of this year, a total of 60 million SOL was created from a 15% per year inflation rate. He ends by saying you'll be lucky if SOL breaks over $200 again. And that's not what the Solana soldiers want to hear exactly, but is it true? To find out, we're gonna have to look at the hard data. But first, let's get a little background on the mechanisms behind Solana's inflation. Solana, a high-performance blockchain celebrated for its speed and scalability, operates with a unique inflation mechanism that often attracts attention. Understanding the dynamics of Solana's inflation rate is key to grasping its potential impact on the network and its native token, SOL. And the inflation rate of Solana is coded to gradually decline. Austin Federa, head of strategy at Solana, explains.
Solana's inflation rate began at around 7% and it decreases by 1.5% every year until it ends at that sort of steady state of 1.5%.
So this means that Solana has an annual inflation rate of around 3.5%. This rate, however, is not fixed. It's designed to decrease by 15% each year, ultimately settling at a long-term rate of 1.5%. Solana Compass shows the total supply at almost 584 million tokens, with a circulating supply around 466 million. And we know the circulating supply is the amount of SOL that is currently circulating across exchanges, DEXs, and user wallets, and includes both staked SOL, for example, activated and delegated to a validator, and unstaked SOL, and around 117 million SOL tokens in the non-circulating supply, which is SOL that is locked in a stake account, or SOL that is owned by Solana Labs or the Solana Foundation. The current inflation rate is 5%, not 15%, with an initial inflation rate of 8%. So we can see in the data that the rate is going down. The annual taper, which means the yearly reduction in the rate at which new SOL tokens are created and added to the circulating supply, is 15%. And the final inflation rate is set to be 1.5%. One look at the number and we find it's a far cry from the 15% year inflation rate we were hearing about in the tweet at the beginning of the video. But what's the reason for token inflation in the first place? Why they need to do it at all? The inflation mechanism in Solana has several implications for its ecosystem. It all comes down to network security and rewarding validators and stakers. Some inflation incentivizes participation in the network, making it harder for bad actors to gain control. And the decreasing inflation rate creates a sense of scarcity over time. As the rate of new token issuance slows down, it can potentially contribute to an increase in the value of existing SOL tokens and ensures that the supply of SOL tokens doesn't expand uncontrollably, which could lead to the devaluation we heard about in the tweet. So how will Solana's inflation rate affect the price of the SOL token in a bull run? In a bull market, when optimism is high and demand for crypto surges, inflation becomes far less of a concern. The way I see it, there will be three factors that make Solana a leading crypto project this bull run. First is surging demand. As Solana's ecosystem expands, attracting a growing number of users and developers, the demand for SOL tokens is likely going to skyrocket because people want to buy it to use it for DeFi.
8 $1 million chips, please.
I think that's about 8.
Everything on Solana.
You win $288 million.
Let it ride.
$10,368 million.
Now, if you want to join our Discord, you can do it and talk about DeFi on Solana with other BitSquad degens, links in the description down below. And make sure to subscribe to our NWF Weekly Report for degen Solana Alpha in the Degen Den paid section that you can't miss. Struggling to stay updated on the latest crypto news and trends? It's easy to miss crucial updates in the fast-paced crypto world. Subscribe to our new newsletter, NWF Weekly Report. Get the latest insights, trends, and tips delivered straight to your inbox. Sign up today. The surge in demand for cold hard SOL can easily outpace the rate in which new tokens are introduced through inflation. Secondly, network expansion. Solana's impressive transaction speeds and low fees make it a prime choice for a diverse range of applications. As the network continues to expand and onboard new projects, the inherent value of Sol tokens increase, further fueling demand. And last is the scarcity factor, driven by the mechanism of decreasing inflation. Although new tokens are entering circulation, the decreasing inflation rate creates a sense of scarcity over time. This can trigger a psychological effect, contributing to price appreciation. While some investors may perceive inflation as a negative, we know it's actually crucial in supporting the network's growth and security. A well-managed inflation rate builds investor confidence. And as your Sultan of Solana, I'm looking into my crystal ball and seeing big things for Sol this cycle. Share your thoughts in the comments down below and make sure to smash that like button if you found value in this video. That's all I got. Be blessed. Sultan out.